Hello guys and welcome to my YouTube channel once again. And I did a video about how you can catch big moves in the market. I think that was my last 2 or 3 videos on this channel. Then today I want to do another part. This is like a second part of that video. Then I'll still be using Crash 1000 to explain how this strategy works, how you can easily catch multiple spikes or scalp for long hours. With this simple strategy, you will catch the big moves at their beginning, then you ride with it, guys. All right, you can see I am on Crash 1000 index, and the first thing I would want to do is to go to a higher time frame. Besides, the strategy is actually the one which I've shown you guys previously, which you need to go to the higher time frame to look at the candlestick patterns that are formed. And first of all, you should look at the structure that is currently formed in the market. For this particular video, I wouldn't want to go to the how do we call it, the weekly time frame. I just want to start from the daily time frame, because the strategy basically requires the daily time frame, not the um, weekly time frame. So, and I'll have to duplicate this. All right, I duplicate this line. First of all, looking at this structure gives you an idea that the market would want to buy. The market would want to buy, and as you can see, market actually broke out of the previous support that turned resistance. There's a breakout, and the market is actually retesting that zone, and this is the zone I'm talking about. This particular zone at this point, you can see there was a breakout at this point. One moment. All right, so you can see market broke this level, then has been selling from this level, then now it's broken out and it has retested this level. We expect the market to be buying to the upside since there's a breakout and retest. So let's just watch and see how it plays out. All right, meanwhile, the main idea about this strategy is this. You remember when I told you, when you see let's say you have a bullish engulfing candlestick pattern right here, then we expect the next candle to be buying. Yes, we expect the next candle to be buying. Or if we can just look at the previous candlestick, the previous day's candlestick, and see and monitor where it closed and where it opened and where it the high and the low. You can get some information with that to determine the next move in the market in the current day. You see, so let's say you're able to, let me use a line to mark this zone. Let me use a line to mark this zone, and you can see the market has been selling from that line down. Market has been selling. So let's say maybe I just to put it right there to accommodate these other ones. It's still gonna work. It's still gonna work. All right, so let's say we are placing that horizontal line there. Now we want to see a breakout. Remember, if you can remember one strategy I posted here in this channel, all you need to do is to wait to see the reaction of market along this horizontal line, because this is a strong resistance zone. It's a strong key level in the market. We want to see the market break out of this zone, retest properly, then we go into make some buys. And if you can follow these things up, guys, you can make some good money every day in the market with this particular strategy. So we have to go to a lower time frame to see what I've just told you now. All right, so you can see this for the 4-hourly time frame, and I think let's go down to the 15 minutes time frame, because you can see where the breakout happened there on the 4-hourly time frame. This is where the breakout happened. It happened there on the 4-hourly time frame, but we won't be able to enter the market on the 4-hourly time frame. There's no indication except you wait for this market to go up and come back at this point. That's the retest, where it's trying to retest before you want to think of buying. But to enter the market early, we then have to go to a lower time frame, like the 15 minutes time frame. I like going to that 15 minutes time frame, and I think we would find a reasonable entry at that point. All right, so you can see this was a kind of a breakout and a retest. Mind you, uh, this was the breakout and retest. And mind you, I'm using a line, a single line. So if we used a rectangle to mark out this zone, we would find out that this bearish candlestick is actually resting on the key level, you know, is actually retesting on that level, on that particular key level where we marked the close of the previous day's candlestick. Sorry, the high of the previous day's candlestick. So in that case, what would we do? We want to see a confirmation, then we enter the market to trade. Like, what is the confirmation now, guys? Let me delete this line and get another one. All right, you can see this bullish engulfing candlestick pattern now is a confirmation. Let's say I raise this line up here. I hope you understand what I'm trying to tell you. This is a zone, not a single line. So if we use the zone, this bearish candlestick will be resting on it if we use a zone. So you can see these formations here. After this bearish bullish candlestick here, which engulfed the previous bearish candlestick, then we know we are having a bullish engulfing candlestick pattern, which signifies bullish movement in the market. Then we go into buy. Guys, see how many candlesticks that you can possibly scalp the market. 1 2 3 4 5 6 7, and this is the 15 minutes time frame, guys. 15 minutes time frame. This is 7 candlesticks. That's, you'll be scalping for almost about an hour and 45 minutes. You're making some good cash, guys. Then there was a little pullback, then the market continued buying to the upside. So even if you can just scalp just from this particular point to where it started giving the pullback, just with a losses of just two, this is 0.5. 0.5 is giving $17. Just imagine you are doing this with a losses of, let's say, maybe a 1.0. 1.0 will be around $35 in profit. Then if I use 2.0 like I usually do, or 3.0, 2.0 will give me how much? Let's just see. 2.0, losses of 2.0 of 2 will give me, where is that stuff? So I enter the trade at this point. Then my take profit is at this point. Be here. That's about $69, guys. That's about $69 only from one position. Imagine you open up the two positions based on your account balance or your account size. So you can make over $100 with just this simple move, and you can just rest for the day with just this single move. Guys, this strategy really works. All you need to do is just to mark out where the previous day's candle closed or where it opened. Mark all those open, high, low, close. Wait for market to get to those areas, then watch out for the reaction. Mark those high, the close, the open, and the low. Mark them out with the straight with the horizontal line on the daily time frame. Then wait for market to get to those areas and watch out for reactions. So you see how that strategy works. And there are other opportunities. Let's check the next day's candlestick. So you can see all this. And mind you, like I used to tell you, it's not that this thing is automatic that it must work. There are times it may not work as you expect. Then you do not kill yourself. Like now, after that day's candlestick close, let me show you. Like I tell you, you mark the high, the low, the close, and all those. Let's say we mark the close of the candlestick we were considering. This is it, the close. Then the new day's candlestick starts. We want to see the reaction at this point to see if the market would want to break. If the market breaks this particular level, then goes up, then comes down to retest, then it will want to buy. But if it gives us an indication it's going to sell again, then you enter to sell. Let's check it out, guys, on the 15 minutes time frame. Meanwhile, this is let's check the day so you won't make any mistake. This is on the 1st of April 2024. Let's look at it. On the 15 minutes time frame. 1st of April. I think it should be somewhere here. Yeah, this 1st of April. This 31st of March. Wait, the first here. We are already in the 1st of. Okay, see the candlestick that started the 1st of April here. It was a bearish candlestick already on the 15 minutes time frame. It was a bearish candlestick already on the 15 minutes time frame. You can see that is 15th of March. Where is the arrow line to? So you can see this. This is 15th of March, 1st of March. This is the midnight. Now, even with this these candlestick patterns that we are having on the 15 minutes time frame, you can see there is a confirmation that there is going to be a spike here. And with this spike, it's confirmed that the current day's candlestick would want to be bearish. Then we have to just follow it. I don't know if you understand, guys. This thing is very simple. It's very simple, because until the market breaks above this zone and retests properly, that is when you say the market will continue to buy. Look for buy entries. But once it gives you a confirmation here, because the close of the previous day's candlestick has become a resistance zone on the 15-minute time frame. So now this market, you can see the market just sold down, continued selling, came up a bit again, then still continued to sell to the downside till it got to the previous day's candlestick low. See what it did before retracing to the upside. And you will see that on the daily time frame. If you go to the daily time frame, you will see this market sold first to this previous day's candlesticks low. Then this must be the low before it started buying to the upside, guys. So this strategy really works. All it requires is you marking out these things and being patient. Whenever you do not see your strategy, do not kill yourself. Now let's go back and check the next day's candlestick. Now you can see that this particular one was bullish, like here. This one was bullish here. So how will we know when to enter the trade? Because the previous day's candlestick actually closed at this point, closed here. This bearish candlestick, you can see where it closed at this point. So now let's see. Let me just move this thing. Maybe I can just duplicate this and put it right there. I can just duplicate this and put it right there. That was the close. Then maybe I will have to change this color so I can easily identify it. Okay, I can use blue color. All right, then let me go to the lower time. Let me go to the lower time frame, like 15 minutes, and see what we'll have there. And that was on the 2nd of April. Let's go to 2nd of April to see it. Where did 2nd of April start? Okay, this is the 2nd of April. Hold on, this is the 1st of April. Okay, now you can see this was 1st of April. This is where it closed. 2nd of April started here. On getting to this level where it had been selling before, you see it sold first, then sold to the downside, then still went back up, came back and retested here properly. On retest, see it bought to the upside. It came back, retested this same level here, and started buying to the upside. And then it broke this particular previous day's high. You see, it broke this previous day's high, came back and retested, and still bought to the upside, massively to the upside. Guys, this strategy really works. It really works. It requires a bit of practice. It requires practice. Now, what I will tell you, because you might be asking the question, there was no confirmation here to enter this trade here on this particular day's candlestick. You can see, and when this spike came down and the next candlestick was bullish, we did not have a kind of a bullish engulfing candlestick pattern here, or a pin bar, but rather this is called a bullish harami. This is a bullish harami at this point, and you see the market bought to the upside. So it doesn't mean that you should trade all candlestick patterns. If you want to stick to bullish engulfing candlesticks or the engulfing candlestick pattern, you can stick to it until you see it. Do not trade. You understand? So if this happens, then you are not sure about entering the trade, or you want to stick to trading engulfing candlestick, you wait until you see the engulfing candlestick pattern before you trade. Guys, that is just it. So you can just discipline yourself and stick to that. Like what happened in the previous day, there was an engulfing candlestick pattern that gave the signal to go into buy. Then here also, you see, after after we had a breakout, it came down, then went up again. At this point, there is a bullish engulfing candlestick pattern here that signified the market was still going to buy before you enter. So if you do not see it after a retest, do not enter the trade, just to be safe. Do not be in a hurry to trade, guys. Do not be in a hurry to enter a trade. So always wait for it before you enter the trade. You enter to make your trade, guys. So I really advise you to always stick to your particular candlestick pattern. The one you know, you can just stick to the engulfing candlestick pattern, or you stick to maybe the pin bar or evening star. Just stick to what you stick to as your reversal pattern. Always wait for it before you enter the trade. Always wait for it before you enter a trade once the market is actually in the zone when you expect the reversal to happen. You see, so now if we go to the daily time frame, let's see the current day's candlestick. Let's see what happens. You can see the current day's candlestick is still within the highs and lows of the previous day. It's within the highs and lows of the previous day. Then if we should adjust, let's duplicate this line and put it where we have the close of the previous day's candlestick, which is this. Then let me change this color to maybe black. This is a very simple strategy, guys. Let's change it to black, with the idea that if the market can go below this black line, and where's my outline tool? So the idea is that if the market can, because this is the previous day's candlestick, this bullish candlestick here, if the market can go below this candlestick, then retest it properly, it will sell down. All right, so let's go and check what happened on the 15 minutes time frame. You can see where we have this was actually a strong support zone, and the market broke through it and continued selling massively. In this case, there wouldn't have been any opportunity to enter the trade. There wouldn't have been any opportunity. It doesn't matter. It doesn't meet your strategy. Do not try to force anything to happen in the market. It doesn't meet this particular strategy. The only strategy that would have worked for this particular how do we call it, for this particular setup is the other one that I used to show you guys, which you want to see some kind of movement in the market that indicates a possible reversal in the market. That is a strategy that will work. But if you want to stick to this one, stick to this one. I don't want to show you what you would have done, so that you will not be confusing yourself. Too much of information is not good. Too much of information. Either you stick to this particular strategy, or you stick to the other ones. You will find the other one on other videos. When you go to other videos to watch in this channel, you will see explanation about what this particular structure you have here, how you would have been able to analyze this structure, then to know when to enter this trade that is selling massively to the downside. You understand? So you can just stick to this one I'm showing you, this particular daily candlestick and 15 minutes time frame analysis entry, or you stick to this particular impulse and impulsive correction movement of the market, and you will still trade and be profitable, guys. These things are very easy things to do, and you'll be profitable if you follow them accordingly, guys. The video is already too long, guys. Sorry about that. I was just trying to see if I can explain these things, because I have seen a lot of complaints. People are complaining they have been blowing their accounts. The strategy is difficult, they can't do this, they can't do this. So I'm trying to see if I can find an easier way for people to try to make money trading the boom and crash and the volatility pairs in the market. This strategy I'm showing you today works for both volatility pairs and the boom and crash market. Even other markets, anything that is tradable, it will work, guys. So I don't want to make this video more longer than this, so please just like this video. I know you've gotten some value from it. Like this video, then share your thoughts in the comment section, and also subscribe to this channel, guys. Please, I want you to help me boost this channel. Without you guys, this channel won't exist. So you need to subscribe and keep us, so that to keep us growing. And also know that once you do that, I feel appreciated, that you appreciate what I'm doing here, guys. So please encourage us by liking this video and subscribing to this channel. Share your thoughts. There's a link in the description of this video if you want to enroll in my one-on-one mentorship. So click on that link. It'll take you to my Telegram channel, where I post updates and other stuff. From that channel, you'll find my direct contact, so that you can enroll in my one-on-one mentorship. Although there is a training that is we're supposed to start yesterday, but due to the request of so many people, we have delayed, so that they have time to take action, and we give them to this I think this Friday or so, for them to take action. And once they take action, the training will be starting during the weekend. So do not waste time. If you want to enroll, so that I can point to what you need to see in the market to make some good money regularly and start withdrawing, click the link in the description of this video. Go to that channel. You'll see every information you need about that training. Then take action as soon as you can, guys. So till my next video, guys, please stay blessed and peace out.